Welcome back to MarketSnap, your daily market rundown. Today was one of those sessions where a single headline could have easily hijacked your entire read of the tape, and honestly, it almost did. We're talking about the July jobs report, which shocked absolutely everyone. The U.S. economy lost 23,000 jobs versus expectations for a gain of nearly 100,000. Not a single economist in Bloomberg's survey got it right. And yet, the market's reaction: a massive rally in tech. It's the classic bad news is good news playbook, and it's back with a vengeance. But before we dive into why that happened, let's set the stage for the rest of the session. The headline numbers tell a story of divergence. The Nasdaq Composite surged 1.3%, leading the charge as rate-sensitive growth names got a fresh lease on life. The S&P 500 wasn't far behind, adding 0.6%, and continuing its relentless grind toward new highs. But the Dow, it slipped 0.1%. That's the setup you get when the market is betting on the Fed staying put or even cutting rather than hiking. The Nasdaq's move is really the story of the day. It's up over 1% and closing in on its 52-week high. The weak jobs number essentially took a September rate hike off the table for most traders. That's a huge deal for the long-duration, high-multiple names that have been under pressure. The market is now pricing in a much more dovish Fed, and the Nasdaq is the biggest beneficiary of that repricing. The S&P 500, meanwhile, is showing remarkable resilience. It's up 0.6% and hovering just below its all-time high of 7,793. This is the second straight weekly win for the index, and it's doing it despite a mixed earnings season and ongoing geopolitical uncertainty. The breadth is broadening, too. It's not just the mega-cap tech names carrying the load anymore. Now, let's talk about the movers that really defined the session. Airbnb absolutely exploded, jumping 17% after a blowout quarter where the company leaned into its A-native transformation. That's the kind of move that makes you sit up and take notice. SpaceX also had a monster day, surging nearly 16% as the market continues to digest its first-ever earnings report. And Palantir? Up 10%. The software snapback is real, with the stock up 38% on the week. On the flip side, the memory and storage complex got hammered. SanDisk, Western Digital, and Seagate all fell 4 to 5% on soft guidance. That's a warning shot across the bow for the AI trade. If the hardware guys are seeing weakness, the market starts to question the durability of the entire build-out. Monster Beverage also took a hit, dropping 4% despite beating earnings, which tells you how high expectations have gotten. The most active stocks today paint a picture of rotation. Exxon and Chevron were both down about 1% as oil prices pulled back on hopes for a Iran deal. Oracle was up 2.4% on heavy volume, even as UBS cut its price target. The market is clearly still trying to figure out the AI spending story. And Corning, up nearly 6% on the back of strong optical demand. That's a name to watch if you believe in the AI infrastructure build-out. Zooming out to the weekly performance, the rotation is even more pronounced. Palantir is up 27.5% on the week. Shopify, Coherent, and Rocket Lab are all up over 14%. But the real story is the precious metals complex. Agnico Eagle, Wheaton, Anglo Gold, Barrick, and Newmont are all up double digits. Gold is pushing toward $4,300 an ounce, and the miners are finally catching a bid. That's a classic hedge against the uncertainty we're seeing in the macro picture. The weekly losers list is a who's who of former market darlings. Honeywell Aerospace is down 22% after its spinoff. Western Digital is off 20%. AppLovin, Datadog, and Celestica all down double digits. The common thread? High expectations and any hint of a slowdown in the AI trade gets punished brutally. This is the kind of volatility that separates long-term investors from the day traders. Looking ahead to next week, the earnings calendar is packed. We've got Diageo, Toyota, and Warner Bros. Discovery reporting on Thursday. Also on the docket, Gilead Sciences, Keurig Dr. Pepper, and American International Group. And for the income crowd, Aflac and Sun Life Financial are set to report. This is the tail end of earnings season, but there are still some landmines and opportunities out there. You can find exclusive earnings transcript summaries on MarketSnap. We break down the key calls, the guidance, and what it all means for your portfolio. Sector-wise, the weekly numbers show a clear flight to safety. Basic materials are up 7.4%, that's the gold trade. Industrials are up nearly 4%, and tech is up 3.4%. But here's the interesting one. Energy is flat on the week, despite all the geopolitical tension. The market is clearly betting that the Strait of Hormuz situation gets resolved without a major supply disruption. On the downside, utilities are down 1.8%. That's the rate-sensitive trade unwinding as the market prices in a more dovish Fed. Real estate is also weak, down 0.8%. Consumer cyclicals are basically flat. The takeaway? The market is rotating away from defensives and into cyclicals and materials, which is typically a sign of risk-on sentiment. Now let's talk about the elephant in the room, the Fed. President Trump is reviving his effort to fire Fed Governor Lisa Cook, just 2 months after the Supreme Court blocked him. Cook has been vocal about her willingness to hike rates if inflation stays elevated. This is a developing story that adds another layer of uncertainty to the central bank's independence. And with Fed Chair Kevin Warsh reportedly talking to Trump all the time, the market is starting to price in a more political Fed. That's a risk factor that's not going away anytime soon. There's also a growing debate about whether we're in an AI bubble. Some analysts are drawing comparisons to 1999 and 2007, pointing to surging debt and extreme valuations. But others argue this is just a rotation within the theme, not a collapse. The truth is probably somewhere in between. The hyperscalers are spending $700 billion on AI infrastructure, and that's real money. But the question is whether the revenue will follow. That's the million-dollar question for the next 12 to 18 months. One more thing to keep on your radar. The Trump administration is imposing a 15% tariff on solar panel imports and setting a minimum price on polysilicon. That's a direct hit on Chinese manufacturers and a boost for domestic producers. It's part of a broader push to secure critical minerals for defense supply chains. The administration is also blocking exports of tungsten scrap and battery waste. This is industrial policy in action, and it's going to have ripple effects across the supply chain. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in. Remember, days like today are why it pays to stay focused on the long term. The market is going to have its wild swings. The key is to stay disciplined, keep your portfolio diversified, and let your winners run. If you found this breakdown helpful, make sure to subscribe and hit that notification bell so you never miss a daily recap. And